All right, good afternoon. Welcome back here to Trader Minute. Great to have you aboard. Market is it's kind of calmed a little bit, had its morning gap and sell, and has been bought up here a little bit in the last hour and a half. And overall, just kind of calming a little bit. If I pull up S&P futures, you can kind of see what it looks like here in terms of today's action relative to Friday's close, and it's kind of bleed lower. And then we've seen what about a 17-point snapback, 16-point snapback from the low here. There was no volume to suggest low is in or anything like that on that move lower. But you can see where the market's trading now. It's pretty much trading right where it had its 20K volume earlier this morning that we talked about. And so, are we going to compress around this level a little bit? I think there's a decent chance of that. What's really interesting to me is that we saw small caps go red. And, they're snapping on back here. In fact, they're closer to their highs for the day than what they were. Now, one of the things that is common after upward ticks is to see some sort of top that looks like a T. And we've talked about the bottom reversal with this type of pattern where you get a down, 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 then you get a gap down, rally back, but then it falls into the close, and so it gives this kind of gravestone doji after a strong sell-off. That's generally a bottom, and a lot of times you see gap up and go after that. We have kind of the opposite shaping up with some of these as the market rallies, and IWM could be in that position. Now, for a bearish confirmation, it needs a gap down. Right. It does need a gap down, and so that wouldn't come here until tomorrow morning. But anyway, there's some rally back, here in a lot of things. And as I talked this morning, I'm not too interested in analyzing a whole lot, more observing. But as the day has progressed, okay, now I can start to analyze, take a look, and say, okay, where might there be some opportunities? And so I want to talk about 4 stocks in particular that I'm looking at, that I'm looking for an opportunity with. Let's start with the banks. I'm just going to use JP Morgan as the poster child here for it. And, JP Morgan gapped on up. Nice little breakaway gap. Nowhere near as overbought as other stocks out there. But pushing above November's highs here with this gap. This is one that, I think when you look at the actions that have taken place to fuel this rally, it makes a lot of sense for the banks and for a bullish thesis on the banks with what has developed. And, do I have price action in the charts to suggest it? Starting to get some of that. I know there's an argument to be made, well, Fed's not going to raise rates going forward, so or if they don't raise rates going forward, won't that hurt the banks? No, because it will actually allow the yield curve to steepen if the Fed stops pushing on the front end and we end up getting economic growth that raises the back end. It would actually be a net benefit, net positive to the banks. And so is there a good risk-reward situation to get involved with here? JP Morgan, I suspect this one can easily go to 120. And so just looking for that opportunity to get in where I can get a good risk-reward scenario. And I just don't think I have it right here. I think I could buy it real short-term and say, look, if 112 breaks, I got to go. I got to leave. But the chances of me getting whipsawed out are very, very high. They're not exactly on the low end there. And so, okay, do I wait for a little bit of pullback, move back above the 7, a consolidation day? With everything that's going on in the market, I'm not exactly sure what I'm waiting for, other than to kind of look at everything on aggregate and say, okay, how do I want to position? But JP Morgan, one of my favorite setups out there. You can see this on the hourly chart. We have this kind of 111 and a half that's been resistance. We get this kind of W-shaped double bottom action, right? And then we get a high volume gap up, breaking the double bottom. So from just a pure chart standpoint. There's a very bullish chart here with JP Morgan, and one that the options aren't too bad. In fact, if we come in and look at JP Morgan's call options here, and we take a look at the 21st of December, you can see spreads aren't too bad. It's something where a $4 rally and I double my money. The implied volatility is only 20%, so it doesn't have any of those major issues that options have had and options in other spaces have. But for me, this is about, okay, how tight do I want to get, because we're so far away from the 7-day moving average that to have a day like this, right back here, you see this red day kind of in the context of this upward move, to have that type of day would not be uncommon, would not be that unusual, and I'd rather be buying on that type of day or the day after that type of day than buying ahead of it here overall. So it's a candidate I could get into, but I am leaning towards, waiting here on it, and that goes with the rest of the banks, from Bank of America to Goldman to Morgan, whichever one you want to put in. I'm not really interested in Goldman, but JP Morgan, Bank of America are the two that I'm most interested in playing, and there's not a big difference between the two. Now, outside of the banking sector, there's a few things. Let's start with Disney. Disney's down 20 cents here today. It gapped up, but what was interesting about Disney's gap up is it looks very different than a lot of the other stocks that are out there. In fact, Disney's chart is very different than many other charts that are out there. And Disney had a little bit of rally last week, fueled by a change in analyst commentary. And we have seen this slow transformation here in analyst commentary when it comes to Disney, and how companies or how analysts are looking at Disney here. And so it's one that do we see the tide turning a little bit? But overall, we're a stock that's kind of stuck here in this 112 to 118 range on a company that if we back this out to a weekly, it's trading near all-time highs, right? I know Disney gets this kind of bad rap and everything else for a lot of reasons, ESPN being one of them. But this is a stock trading near all-time highs. Now, I know it was here in 2015, so it hasn't gone anywhere in those years. It's had some dips and rips, but it's been consolidating up here at these highs, and a lot of times when you're consolidating up at the highs, you break into new highs, and this is one where I expect 120 to come into play here on Disney. The options aren't bad. In fact, the options are actually really good. You can see implied volatility at 18. Spreads are normal. Delta, all of that is in a really nice position. So this is like a JP Morgan where the options, they're not dealing with what they have before. But you can see now 2 gap up and sell days in a row. Had this on Friday and has had this today. After this nice little kind of island reversal off of the lower band. So the overall daily context here is pretty bullish. It had 2 really nice days, okay? Two days where it's just not getting any buy pressure, but it's not being sold, too aggressively. There was some big volume on Friday, as there was in quite a few stocks here being the end of the month. But I just chalk that up to end of month, not that it means a whole lot. And so here we are just kind of in this consolidation that I'm expecting to break higher. So what do I want to say? Well, nothing too much on the daily action, but here we are on the hourly. Come down the lower Bollinger Band. I just need to break above that 7-hour moving average, and I'm willing to go after it using today's lows as a stopping point. I'd prefer we get a little closer into the retracement zone, so maybe have a sell day down to 114, 114.25, and then a move back above the 7-hour. That would be a little easier. But when it comes to Disney, this is not a stock that moves above the 7-hour and then it's all clear. This is a stock that whipsaws a lot above and below the 7-hour. It's a company I've followed for many, many years. As many of you know, I own Disney stock, and I accumulate the position over time, and it's something that I'm not looking to sell. It's not a trade. It's something that I keep buying a little bit more here and there as time goes by, and when my daughter is old enough, she can figure out what to do with it. But from a trade standpoint, it is something that it really looks very close to setting up and to into being very playable up to the 120 area, and that's what I'm looking for here with Disney. So chances of it triggering here today are pretty slim unless it rallies a bit into the close, but one that could trigger at any moment. Then there's this whole separate class of stocks that I think you can lump Microsoft into. This class of stock that is outperforming the market, that is breaking above the highs from the snapback, the market sell-off snapback in October and then the early November highs. And it's breaking above those. And it has this nice little kind of W bottom, double bottom pattern here, associated with it, and breaking here into new highs with the gap today. Now, it hasn't been gapping up. It hasn't gapped up and been bought up aggressively. In fact, there's been more sell pressure on it than buy pressure here today. But is that an opportunity to buy this gap breakout? We can find this same chart amongst others here on my watch list. And, for example, CSX. Railroad transport. You can see how it has been consolidating. Not quite a W pattern like Microsoft. A little more of a head and shoulders like pattern here. All right, with higher low. Okay. But you can also see breaking out into this new short-term high. A very symmetrical type play, a very solid setup. We're not talking about something that's overbought on the daily chart. We're not talking about something that's overbought any sort of substantial degree on the hourly chart. And, at the same time, we're not talking about something that just took off to this morning with the rebalance of positions. And so this is one that I find to be very intriguing, along with Microsoft. But, similar charts, outperformers, breakout action this morning without a ton of follow-through associated here with it just yet. So if I go get into CSX, right, this is something I suspect can move into the 76 to 78 level, just fundamentally. In fact, even in the 80 level, what type of pullback would be palatable? I don't want to be in any pullback, but what type of pullback would be okay? If you look at the options, these 72.5s, they're going for about $2. So I'd need about a 350 rally to double my money. 350, can it rally 350? Yeah, that's not that unusual for CSX to make that type of move. That would push it into a new high. But, stop wise, if I just use the 7, that's $1.80 away. So, on my option, I'd be losing about, 35 to 40%, depending on time value associated here with it. So, do I want to take that risk going into the close here today? The setup is decent, but it's not, it's not a 10 out of 10 in terms of probability. And that's where I look at a lot of these, and, I go, okay, it's decent. It's definitely playable. It definitely has a risk-reward scenario without the crazy option values associated to it. And so, okay, I can go after it and look to take advantage of it on a move higher. But I guess the part of me that kind of is a little bit reserved is the part that goes, okay, you know what? Do we have one of those, market gaps down 10 points tomorrow, sells off 20, 30 points, and then the buyers step in? Because let's face it, We have just not seen buyers really step into this market today. And the places where you could argue they've bought the most are energy, which was oversold, and then utilities, which, were one of the few sectors to gap down. Outside of that, the majority of sectors have actually seen more sell pressure than buy pressure today, even though they're higher, right? Boeing has seen far more sell pressure today than buy pressure. You take a look at Apple. It has seen more sell pressure than buy pressure, though it's starting to even out a little bit this afternoon. The reality is most of these stocks that are up have actually seen more selling come into them than buying, and that is simply because of the the gap up and trading under those gap levels right now. So anyway, those are some of the things that I'm looking at as I go into the close here today. Something like a Nike is kind of taken off, and just it's just not in a spot that offers any sort of decent risk reward. You go to something like a Target. Okay, there's a lot of stocks that are like this. Kind of looks like Apple, right? But just not great risk-reward scenarios. But the option values, the risk-reward scenarios when it comes to CSX, when it comes to Microsoft, are set up pretty nicely and are set up in a way that, I don't mind going after them, but they are a little far from the 7. So, does make me, it would put me in a situation where if it was trading lower tomorrow, 50, 60 cents, where I'd actually want to be a buyer, not a seller. And do I want to kind of take the risk of riding that? Obviously, with any trade, there's a risk of that coming into play. But anyway, that's kind of my thought process going into the afternoon here today, and looking at this market. I've looked at the put side on things. Some things like a Micron, IWM, and it's one where I think from a put standpoint, a gap down tomorrow. Go, right? And, there might actually be more profit potential waiting till tomorrow morning and buying puts on gap down confirmation than there would be on something like buying a CSX or a Microsoft, here in the coming, 24, 48 hours. And so, again, have to kind of balance that. But those are where my thoughts are. Again, I haven't made any decisions. I've just been jotting notes here as I've been looking at things and observing things. But, I'm still not convinced that we have seen the market has shown its hand. I'm not convinced at all that the market has shown its hand. And, one of the reasons that keeps me a little bit cautious, or one of the things that keeps me cautious, is the fact that we just have not seen the dollar move, which tells me that this is kind of a non-event globally, which I know when I say something like that, well, how could it be a non-event? Stocks are moving. Yeah, I know. But when it comes to the overall implications of stock direction going forward, I think, today's action is maybe not as clear-cut or maybe not as indicative of what's going to happen going forward as it would be had we seen a big drop here in the U.S. dollar. Thanks for hopping on. I'll keep my thoughts here. I'll put my thoughts into the close into the message center. And, if I do go jump into CSX or Microsoft or, Disney, if it rallies, I will make sure the alerts go out, and we'll talk about those. Thanks for hopping on. We'll talk to you later. Take care.